We are super pleased to have him with us today. If you don't know, Jeff is the President and CEO of Friendly Hills Bank. We're happy to have him as a chamber partner and chamber member for many years, even before he was even open as a bank. So we appreciate his partnership, but lots of confusing information about the PPP. I got too many P's going on here. The PPP and what you can do for loan forgiveness and what's necessary. And maybe Jeff has some information on what's coming up. So without further ado, go ahead, Jeff, take it away.
Great. Thank you, Carol. And thanks everybody for taking the time today to join us. We're going to go over some important information regarding the program. If you're a borrower of Friendly Hills Bank, this is all going to be old information for you. We had some webinars some weeks back as this process got started to walk you through. But this really is more intended for chamber members that are not borrowers of the bank who may be waiting to get some information. I know there's a lot of confusion around the many different lenders out there and how to approach PPP forgiveness. So the purpose of this today is to give more general information about the forgiveness process, and we're going to make some time at the end to allow for some questions that you may have regarding the process. So without further ado, I think Carol has it set up so that I can share my screen. And so we are going to pop right into our presentation here today. I'm going to go through, it's hard for me to see if anybody raises their hands or has any questions, but we will certainly allow time at the end. So I appreciate your understanding with that. So let's talk about the process and what's going on relative to PPP forgiveness. So if you're not aware, the program has closed. It closed last Friday, so there are no new loans being funded at this time. So the fact that you're on this call would suggest to me that you have previously received a PPP loan. But it's good as we talk about the forgiveness process to remind ourselves about the basics of the program. It is intended for retention of employment. That's why it's called Paycheck Protection Program. And so many of the themes that you'll hear through my presentation are going to circle back to what the true intent of the program was. Loan forgiveness is available now, and we're going to talk about that obviously today. But the key here is two important factors. Number one, that you are maintaining the pay for your employees, and number two, that you are keeping people employed. So as we get into it, you will learn there are two components here that come into play in determining how much of your loan will be forgiven. One based on what it is that you're paying the employees that you have kept, and the other based on how many of them you have actually employed. It is a standardized loan program. It was developed in unprecedented times. You know, we're here to try to help you with getting through this and understanding, but it can get complicated and it can get frustrating because there is so many different components to this and it's all controlled by the government. So don't shoot the messenger here. We're here to try to help you interpret the guidelines that have been established so that you can maximize the benefits of the program for you. Now, a lot of different things have changed since you may have originally filed for your loan, but one thing that has not changed is how they define payroll costs. Payroll costs are defined as cash compensation, which is based on the gross pay to the employee. It does include bonuses and tips, vacation pay, any leave allowance. All of that is included. If you are self-employed and you applied for your PPP loan based on compensation that you have as an owner, that will also apply as part of the forgiveness, as does income replacement for the self-employed. Also, payroll costs include contributions that you have for the health benefits of your employees. These are the contributions that you as an employer made, not that the employee did on their own benefit. Also, the same holds true for retirement plans. If you are funding some form of a retirement plan for your staff, that would be included as a payroll cost, as well as state and local taxes that you pay as an employer. Now, when you applied for your loan, it may have had a condition that at least 75% of the loan had to be used for payroll costs. That has been reduced to 60%, and the 60% standard will also apply towards forgiveness. So that should allow for some additional expenses beyond payroll to come into play here. And if there's one thing that you're going to hear from me throughout this presentation, it's the need for documentation. Documentation is extremely important, and we're going to talk about the forms of documentation and what's required as we moved on. So I talked about the 60% and that there's now 40% eligible as non-payroll costs. What does that include? Again, this definition has not been changed. The interest portion of loan payments that's on commercial property that's used for the business. This must be on a mortgage, a loan secured by the commercial property. It will not apply to equipment loans, and that loan has to have been in place as of February 15th. It also will also eligible are lease payments. So if you are leasing the space that you're using for your business, as long as that lease was in place as of February 15th, you will be fine. Also, utility payments. This would be any utility that is critical to the business operation. So if you have a business that has a lot of, let's say, you have people that are out on the field a lot, question we often get, will cell phone bills apply? Yes, if mobile is a big part of the business platform that you operate, and you've had those things in place, those essential services for the business in place as of February 15th, it is eligible. And again, you're going to have to document all of this when you go to file your application. Another important component when we start talking about the forgiveness is concept known as the covered period. This is basically the period of time that you as a business are under the microscope, so to speak. It starts on the day that you received your loan. Not the day that you got the note, not the date on the note, but the day that you actually received the loan proceeds. So it could be different than the date on your note. Your lender may have sent you the note, you reviewed it, executed it, sent it back, and then within a short period of time, they funded your loan. Maybe a few days difference, could be a week difference between them, but it is different than the actual note date. It's the day that the money was actually funded to you, either as a check or a direct deposit, or maybe an automatic transfer into your account. And this date is extremely important because it drives many of the different calculations that you're going to need to do on your forgiveness application. Now, when you applied for your loan, it's very likely that you were told that all of your expenditures would be evaluated over a covered period that would be 8 weeks long. That would be any loan that was funded before June 5th. You would have been originally told that you had 8 weeks in order to be able to do all that. That was extended, and now you have a choice of doing 8 weeks or 24 weeks, which means you're going to have a decision to make, and we're going to talk about the components of that decision in just a minute. There's also this concept of an alternative covered period, and all this is a slight adjustment to fit your pay periods. Let's say you have a biweekly pay period and it starts on a different date than your funded date. You're able to shift your covered period for the measurement of payroll costs to that date that starts on your actual pay period. So let me give you a quick example. Let's assume that your loan was funded on April 10th. But your next pay period actually starts on April 15th. You would be able to use April 15th as the first date of your covered period instead of April 10th. But that only applies if your payroll frequency is biweekly or more frequent. Now, we have this decision we have to make of choosing between 8 weeks and 24 weeks. So what are we going to think about? What do we need to consider as it pertains to that? Well, the first is we want to take a look at what our actual calculations are for 8 weeks. And for many of you, given the fact that the minimum payroll was dropped from 75% to 60%, and you probably have other qualifying expenses, there's a very good chance that you may not need to have your covered period go beyond 8 weeks. So we want to take a look at what the expenses were at that period of time. We want to look at what our employment level was over that 8-week period, how much we paid our employees, and look at, to the extent that any of our activity during that 8-week period had issues in there that might cause the amount of the forgiveness to be reduced, then we might want to go beyond 8 weeks so that we have the opportunity to correct it. Either way, you cannot extend the covered period past December 31st. So this should be fine, because with the August 8th date, everything should fall within the 24-week period. But that is the choice that we have, and we're going to come back to that after we've talked about the application. So let's talk about recognizing our expenses and the timing for that. There's two ways that you can look at this, either on a cash basis or an accrued or incurred basis. Cash basis means it's when you actually made the payment, when you actually paid your employees, when you actually paid your rent or your mortgage or your utility bill. That is always a way to go. However, I would be very careful not to try to front load any of the payments in order to qualify for a higher amount. For example, let's say you pay your rent once a month, and you decide to accelerate and make an extra lease payment during the covered period just to have some extra time. That would not fly. You need to be consistent with what the covered period is. Another way to do it is based on accrued or incurred expense. And this is what most of our borrowers are doing. Most of your payroll, your rent, your utility, all of these things were accrued or incurred within the covered period of time. And so you can work with this calculation instead. And if your payroll period is, let's say, before the next period pay, but you pay the expense as part of the regular billing, you should be fine. So another example would be, let's say that you pay your rent on a monthly basis and your rent payment is due on the 20th, but your covered period ended on the 15th. If you're using 8 weeks, as long as you have just 2 months of rent payments in there, you should be fine. What's important here is that we don't double count, that we don't take one expense and apply it more than once. And that it's consistent with the time period that we're working with here as far as the covered period. So the way the process is working is you are going to add up all of your expenses that qualify for forgiveness within that covered period, whether it's 8 weeks or 24 weeks. And there are a number of calculations that you're going to have to do to determine if any of that amount needs to be reduced. And those reductions are built around two primary measurements. Number one, how much you paid your employees, and number two, how many employees that you have. These two measurements are mutually exclusive. They are evaluated separately, and they may use different comparative periods as part of that process. Also, there are parts of the application where we will be talking about how many actual employees you have, regardless of the number of hours they work. And there's also where we're talking about FTE, which stands for full-time equivalency. And that is how you evaluate employees based on the number of hours that they actually work and how that contributes towards your account. So let's talk about these two areas of potential reduction to your forgiveness. The first one, let's focus on how much you paid your employees. In the application, which we're going to show you in just a moment, effectively what you're going to have to do is list out all of your employees who were working for you during the covered period as you define it. Now, we're going to look at those employees only and compare them to the first 3 months of the year to see what it is that you were paying them between the two periods. And we're going to be looking for instances in which either their salary or their hourly wage changed more than 25%. So if you had an employee who was making $20 an hour between January and March, and then effectively through the covered period, you were only paying them $10 an hour, then you would have a reduction that would be more than 25%. Now, it's not based on the number of hours worked. This is based solely on their hourly wage, or in the case of a salaried employee, what you paid them. And effectively, we're going to measure this by employee, and whatever the amount is over 25%, that is going to be deducted from the amount of your forgiveness. So if you have an employee that, let's say, was making $10,000 a month, and you reduce their pay to $5,000 a month, only the amount over 25%, which would be $2,500 a month, is going to be reduced from your forgiveness calculation. And I'll show you that in a bit more detail when we get to the actual application. The second forgiveness reduction area we have to be concerned about is based on how many employees that we have. And this is where FTE comes into play. And just for fun, the government decided to make it even more confusing by having two different measurement standards that you can use. One is calculated and the other is simple. Effectively, calculated means you take the number of hours that they actually worked and divide it by 40, and that provides you with a fraction. And that fraction is how much you would count the employees. So somebody who works 20 hours a week would be counted as 0.5. The other option that you have is a simple method, which is where anybody who works 40 hours or more is counted as 1, and anybody who works less than 40 hours a week is counted as 0.5. Now, one or the other could work to your advantage or disadvantage, depending upon your exact situation. So you may want to do those calculations based on both standards to determine if one is more favorable to you than the other. The other part that can be very confusing when you look at the application is there are multiple comparison periods in which you're going to look at your FTE count. One, of course, is during the covered period, but you're also going to look at what it was at the beginning of the year to the end of the covered period. And there are other potential dates which may or may not come into play. And so we're going to show you a tip on how to really go through the application process so that you don't end up doing more work than may be absolutely necessary. Now, when we're talking about these forgiveness reductions, there are different safe harbors that come into play. For example, if you have an employee who refused to return to work or who requested to work less hours, that is not going to get counted against you. Employees who were fired for cause, that would not be counted against you. Also, if your operations were impacted by government standards that relate to COVID-19. Let's have an example here of a restaurant. Let's say that you only are able to operate now with half of your normal tables, therefore you need half the staff. The fact that you have that reduced staffing due to the COVID mandate is not going to be counted against you. And also, if you reduced your employment, but you brought it back by the time of your forgiveness application date, then that would not be counted against you. So a lot of different reductions that could come into play, but then exemptions that also could kick in. And that's why it's important to read through the application very carefully, which I'll help you with. So there are 4 specific safe harbors that can get you out of any reduction related to FTE. One is being unable to operate at normal levels, as I previously described. The other is if you haven't reduced the number of employees or paid hours during the year. So if you've been continuing to operate at normal volume with normal employment levels, then you would automatically have an exemption from any of the FTE calculations. If you reduced your FTE between February and the end of April, but you brought them back up by the application date, you would automatically have a forgiveness exemption. And if your number of employees on FTE during the covered period is the same or more than what you had during certain prior periods, then that also is an exemption from the forgiveness reduction. So all of this you're going to see when we get into the application, but it's helpful to have an understanding of the structure of how it works. First, you measure what your qualifying expenses are, making sure payroll is at least 60% of that. You then look at any employees where you reduce their pay, or then any employees where you had reduction in hours. That's how we're basically going to go in and calculate exactly what your forgiveness is. Now, some of you may have applied for an economic injury disaster loan. These are the loans that are provided directly by the SBA, and we often get questions in regards to this. Is it okay if I got an EIDL? Yes, it's okay, but with certain conditions. And we have to distinguish between the actual loan, economic injury disaster loan, and the advance that was part of that program and continues to be part of that program. When you apply for an EIDL directly with the SBA, you have the option of requesting an advance on that loan prior to processing. The amount of that advance is usually based on the number of employees that you have, but that advance is then sent to you immediately, and you are able to keep that money and use that money regardless of whether or not you go forward with the loan. So if you received that advance, whether or not you took out a loan with it, if you received that advance, the amount of that advance is going to get deducted from your PPP forgiveness calculation. If you got a loan, the loan is okay, as long as it was received between January 31st and April 3rd, and it was not refinanced through PPP. Now, what do you mean by that, Jeff? Well, if you got your EIDL loan before January 31st or after April 3rd, you're fine. And if it was within that period of time, you just need to be careful that you document, and there's that word again, documentation, but you need to be sure that you document that that loan was not used for payroll purposes, and then you will be fine. If you used it for payroll, then PPP would effectively be refinancing that. But given the many costs that businesses have today, it should be pretty straightforward for you to document the use of that loan for something other than payroll. But so that's for the loan, and if you took the advance, then the amount of that advance is going to come out of the PPP forgiveness amount, irrespective of how you applied it. So all of this, I know, seems very confusing and overwhelming. And so what we really need to do is now talk about the application itself, look at what's in it, and have a better sense in terms of what information you're going to have to provide. We have the application available for you on our website. Also, you can go on to the SBA website and get it directly. I'm going to show you what it looks like in just a moment, but there are actually two different applications, and hopefully for many of you, you will qualify for the shorter form. But regardless of which one you use, it has a base set of components that you're going to have to be filling out. The first is the calculation of your loan forgiveness, and we're going to walk through that consistent with what I've described to you in previous slides. There are certain representations and certifications that you're going to have to make, and there's a couple schedules that you're going to have to fill out. There's also a page that has demographic information that's requested, but that is entirely optional. Now, I mentioned that there's a second one, the easy application, and hopefully many of you qualify for that. So let's quickly cover that and talk about who's able to use the easy form. And the easy form is basically a little bit shorter than the full application and all those different components that I described. So the easy form qualification. First of all, if you are self-employed and you do not have any employees, either at the time of application or today, then you automatically qualify for the easy form. However, if you're not self-employed, then there are basically two tests that we're going to look at. One is, did you have any reduction in pay over 25% to any employee? And did you not reduce your employee count or average pay hours during the covered period? If the answer to both of those is yes, then you qualify for the easy form, and you are going to be able to get by without having to do a number of the different forms that are required. The other test is, did you have no reductions to any employee pay over 25% during the covered period, and you were unable to operate at a normal level due to the government mandates related to COVID-19. So let's go back again to that restaurant example. Let's say we operate a restaurant. We are now at 50% of our tables based on spacing requirements. We haven't reduced the pay of our employees, but we did have to reduce their hours or the number of staff because we simply don't have the same number of tables available. In that situation, we would qualify for the easy form. So those are the standards that come into play. So before we look at the application, let's understand what we're going to need. You're going to need, first of all, some of the basic information from your loan, which should have been provided by your lender. Now, in many cases, lenders have since sold their loan, and that information should have been disclosed to you. Whoever is the current owner of the loan is who you will be working with in processing your PPP forgiveness. It has to be with that lender. It cannot be with someone else. Unfortunately, if you didn't borrow with us, we can't help you with the processing of your PPP application. You're going to need your payroll records for the period from January 1st to March 31st of this year and during the covered period. Payroll records, your payroll processor should be able to provide these reports. Very straightforward. They've probably been doing it for a lot of different clients at this point. And if you are a client of Friendly Hills Bank Payroll, Tim is already prepared with what form that you need and will be able to provide that for you with no problem. You will need your expense records for the covered period. So the qualifying expenses like rent, utility payments, you want to make sure you have documentation regarding that. And you're going to want to have the original application form that you submitted, because there's certain information from that that you'll need for the forgiveness app. And most of all, you're going to need patience. When you sit down to do this, you want to be able to take your time and walk through it step by step and not be rushed, because it can get very complicated very quickly if you try to bounce around. But we're going to try to make that a lot easier for you. So before we go any further, let's jump into the application itself. I mentioned that we do have it available on our website for you. If you go to our website, friendlyhillsbank.com, and click on the COVID-19 information tab, and then Paycheck Protection Program, you will see that the first documents that we have here are the applications and the instructions that go with it. Now, I'm going to show you the full-length application. If you qualify for the easy form, you're going to find that the information I provide is just as valuable. You're just not going to have as many steps as what we're going to work through on the regular forgiveness application. But this is what the application looks like. And you can see at the top, it requests the information like what you had on your application. It needs certain information about your loan, how frequently you pay your employees. You're going to select your covered period. And then you go through, here's all the different payroll costs and qualifying costs that come into play. And then you have these adjustments. Now, here's my big tip of the day for you. This this forgiveness application was written from the top down, but the easier way to do the application is actually from the bottom up. And I don't know why the SBA didn't prepare it that way. But as you work through the document, these are the representations you have to make. But as you work on through the document and get to the bottom, you're going to come to this Schedule A worksheet. And on this worksheet, you're going to list out all of your employees that were with you during the covered period only. So if you had an employee that was with you, let's say in January and February, but they then left, and you didn't have them under employment during the covered period, they will not be listed. This is only to measure the change in pay. Remember the two different areas of forgiveness reduction? This is only the one that applies to the change in pay, not the change in FTE. So if you had an employee who, let's say, was with you during the covered period, but was not working for you before, you will want to list them here as well. This is every employee who was with you during the covered period, okay? So you're gonna list their name and identifier, which is usually the last 4 digits of their tax ID number, how much they were paid during that measured period of time, either the 8 weeks or 24 weeks. What is their FTE? Are they full-time? Are they part-time? Remember, there's 2 different ways you can calculate that. You're gonna put that number here, and then you're gonna look at how much they were paid in the covered period and compare it to what they were paid during the first 3 months of the year. And if it was more than 25%, you're gonna put that amount in the far column here. And all of those are going to be totaled up. Now, I talked about having an exception if there's an employee who refused to come back to work or requested less hours. Those you're going to list in that box there where it says FTE reduction exemptions, just above where it says box 2. That's where you're going to put the actual FTE count there. So let's say we had 5 employees, and going into the covered period, the reduction, we had 2 employees that refused to come back to work. So we went from 5 to 3. When we do this, our average FTE is going to add up to 3, but then just above box 2, we're going to put another 2 employees, which are the 2 that refuse to come back to work. So that will bring our actual FTE count up to 5. The top box is for employees that make under 100,000. The lower box is for employees who made over 100,000. And you will see there's a safe harbor calculation that we will make here as well that pertains to the second forgiveness reduction area. So this is the first thing you're going to want to do, is the Schedule A worksheet, the listing out of the employees, how much they were paid, comparing to the first 3 months of the year to calculate if there's a reduction over 25%. And in addition to the application on our website, there's a link to more specific instructions that you can follow that will also guide you through that process. But this is where I would recommend that you start. Then once you have done that, you can come in here and go into Schedule A, and you're going to enter certain numbers that came in. You're going to be tallying up what your payroll costs were, and also determining if you had any reduction in employees and some of the different factors that come into play to determine if that second forgiveness aspect comes into play here. And here you can see the safe harbors that I talk about, and that's how it's going to help guide you through to calculate what those are. Once you have that completed, then you want to come back up here to the front page, and all of these lines should be a lot easier for you to be able to enter. And as you walk through, it will then determine exactly what your forgiveness amount will be. Okay, we talked about the reps and certifications. You're going to want to pay particular attention to this page. You're going to be initialing next to each of them. So extremely important that you understand what they are and exactly what you are representing and certifying by executing the document. But that is in essence the application and what it looks like. And for those of you that are qualifying for the easy form, I'll just show you very quickly. You'll see it looks very similar. The difference is it doesn't have all those charts, the Schedule A. And the reason it doesn't have that is you're certifying the fact that no employees had a drop in pay more than 25%. So you don't have to list them out. But remember, you will be certifying to that effect, as I showed you earlier. So let's now go back and talk about the 8 weeks versus the 24 weeks. I recommend you go through and complete the application and calculate exactly where you are based upon the 8 weeks following the date in which your loan was funded. And then take a look at that and see how your forgiveness calculations come into play. If you have certain reductions, are there opportunities there that you can correct those within the 24-week period, which therefore helps to get you to full forgiveness? Also, did you have an average compensation per employee that reduced that you could make up with the benefit of that additional 16-week period of time? All of these are different factors that depend on each particular applicant and their business operation to be able to determine whether or not the 8 weeks to the 24 weeks works best. My recommendation is to do the 8-week calculation. If you don't qualify for full forgiveness, then chances are by extending out to the 24 weeks, there will be the opportunity for you to do that, particularly with the fact that payroll costs now only have to be 60%. So hopefully most of you will qualify based on the 8 weeks, because that was the original plan, and that original plan was based on the 75%, so now you have an additional break. Remember, that covered period cannot extend past December 31st. So once you have all of this information together, remember, documentation is extremely important. And if you go into the application instructions, it gets very specific in terms of what information you have to submit with your application. Payroll records, payment statements and receipts, applicable contract agreements, anything that you are applying for using as an amount for forgiveness, you want to make sure you have proper documentation showing that it was within the terms of the agreement. So if you are utilizing lease payments, a copy of the lease that shows it was in effect, and it shows what the appropriate lease payment schedule is, and then proof of payments on that lease. Payroll records should help cover you in terms of most of your payroll costs, but for your benefit costs, that would be a statement that you receive from that provider. What you don't have to submit with your application is all the documentation that you use to support your calculation. So where you were going employee by employee to determine if they had more than a 25% reduction. Keep those records, keep those calculations on hand, because they are subject to future audit, but that is not something that you have to submit with your application unless for some reason your lender is requiring it. All of your documentation, submitted and otherwise, has to be retained for 6 years from the day in which the loan is actually paid off. So not from when you got the loan, but from when the loan actually was paid off. And remember, it is subject to inspection, either by SBA or your lender. Why would your lender want to come in and inspect? Probably because they got a question from SBA. But it's extremely important that you document all of these payments and that you retain those documents for a significant period of time. And remember, all the details of exactly what you need are in the application instructions. So once you have all of this together, you will submit your forgiveness application to your lender. Your lender will be providing you with specific instruction on how you do that. I know that many lenders have not yet started the process, but you will be receiving information from them to know exactly how to proceed. By the way, you have up to 10 months from the date of the end of your covered period in order to file your forgiveness application. So there is not a rush to get that done. But obviously, we recommend that you complete it and have the documentation ready to go and submit as soon as you can. Once you have submitted that to your lender, they have 60 days to review it and then submit it to SBA for approval. SBA then has 90 days to process your forgiveness application. Now, what happens at the end of that process is that they will remit to the lender whatever amount of forgiveness that they approve. And the amount that they submit will be for what you are qualified for in forgiveness, plus any interest accrued up to that point in time. So the interest accrual from the date of your funding to when they issue the credit to forgive all or a portion of your loan. If for some reason your forgiveness request is denied, then that notice will come to your lender as well. it is under either case up to the lender to notify you, the borrower, as to exactly what action SBA took and make sure that your loan is properly qualified, or I'm sorry, credited. The other thing to note is that while you are in the application process, once you have submitted your application, you are not required to make payments. As you all know, you have there are no payments required during the first 6 months of the program, and that payment deferral is extended through the application period. So that's another reason why you want to get your application in, certainly within the 6-month anniversary of your loan funding, so that you don't have a required payment. Some things to keep in mind here before we move to questions. First of all, understand that you are the one responsible for your application. So use discretion in terms of the expenses that you are listing as part of your forgiveness, and also that they're applicable and properly documented. If something is kind of on the edge, if you don't need to include it, don't include it. It's not worth going through the complications of a later audit. And chances are, especially with the additional covered period and the reduction to 60%, you may not even need that expense in order to get to full forgiveness. But the lenders actually have very limited responsibilities here. The responsibilities primarily fall on you, the borrower. So hopefully your lender will work with you and look at your application and make sure that everything on it is sufficient. But ultimately, it is your responsibility. Pay attention to those representations and certifications that I pointed out in the application. Understand what it is you're executing. There are severe penalties for any intentional misrepresentation. And as I'm sure you're all aware, this program is very much in the spotlight and watching for any possibilities of fraud or misrepresentation. Take a look at the application, carefully review it before you submit it, making sure that what you have put together is accurate and thorough. If you have the opportunity, maybe have another person within the organization or someone close to you review it. Always good to have another set of eyes to take a look and make sure that everything on there is complete. Now, we're going to get into questions. I know there's a lot of gray areas, and just to kind of help guide you as to how we look at a number of the different gray areas for our borrowers. We have to understand that this program was developed very quickly. Guidance is not thorough, it's not complete, it keeps changing, but we really look at our interpretation around the guidance of the program. Remember how I started off this presentation talking about what the program was intended for: paycheck protection. And as long as you're staying within the spirit and the intentions of the program, you're not double counting, you're not trying to accelerate payments to qualify, that should help to minimize any later scrutiny that you have. But, you know, understand the different attributes of the loan application, what it's asking for, and really stay within this theme of what's going on with the program to minimize that opportunity for future audits down the road. Because as I shared before, the fact that we now have the ability to go to the extended time, and the fact that we now have the 75% requirement has been lowered to 60%, that should help significantly. So, Carol, I hope this has been helpful. I know it's a lot of information. It can be very complicated. Every specific borrower is unique, but you know, these are the essential elements of the forgiveness program. I will say that we as an industry have been lobbying very hard to get automatic forgiveness for smaller borrowers, understanding the complication of this. It's a very complicated form for many people to do, to go through on their own. And at this point, we really don't have any progress that we can report in regards to that. There has also been discussion of a second wave of funding, which we anticipate will be similar structure to the initial phase, that will allow people to perhaps come back. But at this point, none of that has been approved or had any action. So the best thing is to continue forward based on the existing program and the guidance that we have. So with that, I will turn back to you to see if there are any questions that I can help with.
Okay, well, thank you, Jeff, and this certainly is confusing to a lot of people, and we appreciate the time that you've taken to break it down in ways that we can understand. So appreciate that.
We
do
try.
have some questions. Try, right? We do have some questions. First off, when did you say the first payment on the loan was due?
So your first payment on the loan is at the 6-month anniversary of the loan. That's when the payments actually start. And you should be getting some form of notification from your lender, probably in the form of a bill or a statement invoice that needs to be paid. But the original program structure is still applying, and that is 6 months of payment deferral. The exception being, once you begin the process of a forgiveness application, then you will not have any payment requirements as long as your application is in process. So therefore, on that, I would highly recommend getting your forgiveness application in prior to that 6-month anniversary. So they say you have 10 months to do it, but in order to protect that for payment deferral provision, I would highly recommend getting the application in prior to that 6-month anniversary.
Okay, great, thank you. Another question or clarification, I'm not sure. Our 8 weeks is basically May and June. The payroll comparison is 3 months, January to March 31st, to calculate payroll and FTEs, is that correct?
So what will happen there, and that's if you're using the 8-week covered period, that's going to be standard for a lot of people. Yes, you have a 3-month window comparing to a 2-month window effectively. So you want to make sure that your pay periods that you're using correspond to those dates. So your payroll processing company should be able to provide you with a report that is specific to January 1st to March 31st only. Then you will have them prepare a report based on what your covered period is. So you probably want to first ask for a report that covers the 8 weeks so you can then measure. What you're going to do is you walk through the steps of the application. If it's a salaried employee, you're going to be calculating their average salary. If it's an hourly employee, it's going to be their average hourly wage. But you're going to calculate it for one period and calculate it for the other, and then do a direct comparison. And that's how you will determine whether or not there's a reduction over 25%.
Perfect. Okay, next question regarding the 6 years to archive documentation or keep documentation. Is this from the date of payment of the loan? And what if the loan is fully forgiven?
It is from the date in which your loan was paid off, whether you paid it off or it was paid off through forgiveness. From that specific date for 6 years, you need to maintain all of the documentation.
Okay, perfect. And then the last question, and if anybody else has questions that you want to share, please put it in the chat. But last question I see right now is if someone is a banker with Friendly Hills Bank, a client of Friendly Hills Bank, could you be the second set of eyes as they go through this process?
So if you are a client of the bank and you did not do your PPP loan through us, shame on you. But we are happy to take a look at that for you. And if you want to just reach out to one of our staff, we can certainly arrange that so that we can look at it for you and see. But remember that you are ultimately under the terms of your lender. So, in the case of our borrowers, Carol, I can tell you that well over a third have already completed this whole process and are ready to go. And each one of them, we worked with them and helped them to make sure that the calculations were correct. Not every lender is willing to do that. But if you are a client of the bank, either through our regular banking program or through our payroll program, I'd be happy to take a look at that, or we can have some staff that can look at that for you before you submit. And we have some additional tools that might be helpful as well.
Fantastic. Okay. One more question regarding the EIDL. Can you elaborate on that issue again? So maybe.
Yeah, I'm happy to. So the economic impact disaster loans were direct from SBA. And if you applied for one of those, you likely were given the opportunity to take an advance. The amount of that advance was primarily determined by the number of employees you had. So it could be anywhere from, and I think it worked out in most cases around $2,000 per employee. So it's always easier to talk about things with examples. So let's say we have a business, we applied for an EIDL, and they offered us an advance of $10,000, and we took that advance of $10,000. When we go to submit our forgiveness application, there's a line there where we have to put the amount of the EIDL. Advance, not the loan. We're talking about the advance. There's two separate things. So the amount of that advance will be deducted from the amount of our calculated forgiveness. So if we took 10 grand, let's say our PPP loan is for 50,000, we qualified, we have full forgiveness of 50,000, the SBA is actually going to send 40. They're not going to allow you to double dip with that advance as well as the PPP forgiveness. They have to be, it's all counted in there with it. And by the way, don't lie, because they're able to trace this by tax ID. And so if you don't put it on the application, chances are they're going to catch it anyway. So that is for the EIDL advance. So when we applied for that loan and we received the advance, we then may or may not have been approved for a loan. And even if we were approved for the loan, we may not have actually borrowed the funds. We still get to keep the advance, and that's why they're separate. Now let's assume that we did take out the loan, and we took out the loan, let's say in March. So it's right in the middle, prior to the beginning of the PPP program. Whatever amount of that loan we used for payroll, that has to be refinanced with PPP. And that was part of your PPP application, you may recall. So what I recommend is, if you did take out the EIDL loan, again, we're not talking about the advance, this is the loan. If you did take out the loan, then I recommend that you document that the funds you received from that loan were used for something other than payroll. And in that specific situation, you therefore do not have to have PPP as part of the refinancing of the EIDL. And that should be pretty easy to do, because those EIDL loans are not that large, and we all have many expenses beyond payroll that we can apply that to. There's also no time frame on how you use those monies. So with PPP, we're looking at how you used it during the covered period. With EIDL, you don't have those restrictions. So just document that it's going to, pay your rent over the course of a year. Whatever you need to do, document the use of that money separate from payroll, and you should be fine.
Okay, wonderful. Well, Jeff, I don't see any more questions in the chat, okay. But as you mentioned, Washington, D.C. is going through and trying to come up with a plan for future funding. And of course, as we have done in the past, the Chamber will keep you informed. So look out for our emails. That's one of the benefits of membership, is making sure that the Chamber is providing accurate and credible information.
Carol, as a closing comment, I highly recommend, if you haven't done it already, go on to the SBA website or our website and download the applications and read through them and understand all of these. Now that you've heard my presentation, hopefully many of the things that are in that application will now make more sense, but there's very specific instruction within that which will help you. But I highly recommend you read through that prior to really getting down and starting the process of filling out the application.
Fantastic. Well, again, Jeff, thank you so much for your time. Thank you all for joining us today. And if you have any questions, give the Chamber a call. Otherwise, we'll see you next time. Thank you so much.
Thank you.